Hello, traders. It's 8:02 a.m. Chicago time on Thursday, the 3rd of December, 2020. This is episode number 1891. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we have what is a neutral market, a risk neutral market. We're seeing some inflows, some outflows, nothing to speak of in terms of the indices. We're seeing copper and gold pushing higher, crude pushing higher, so the physical commodities are getting some money today, and the currencies as the dollar gets a bit of a hit. The cable again making a run for it. Cable very strong lately, up a penny, which is a lot. Trading at $1.34.99. The cable making a run for it as these Brexit talks are proceeding. They're currently meeting and they're working out. My news, one of my news feeds said that they're planning to work out the bulk of the deal in the next 24 hours. So this is what's pushing this. Overall, the market is responded overnight a little bit after the rally into the close. The rally into the close was due to news from House Speaker Pelosi about the COVID stimulus plan. There's around 900 billion or so in the works, a bipartisan deal that is likely to pass. We have the issue of funding the government as well coming in. It's that time of year when they wrangle over funding the government and the arguments over amendments for unrelated things that are being pushed and things like that. So there's a lot of political wrangling going on. We're all beholden to this political system that we have. So that's where we stand. The U.S. stock futures were muted ahead of weekly job loss claims data and surveys on the services sector, and as investors awaited fiscal stimulus from the U.S., rising risk appetite pushed the dollar to a more than 2-year low, while gold prices rose. European equity markets fell on downbeat business activity data from the Eurozone and nervousness surrounding Brexit negotiations. Oil prices fell, which is not true anymore. This is, of course, the Refinitiv or the Thomson Reuters report, which I always check in the morning. So overall, a very light overnight session at 136,000. Currently, remember the report in front of you was printed about 15 minutes ago at 7:50 Central, 8:50 Eastern, and we have a market that is very tight. Is that right? 17 points. I don't think that's right. 57 to 74. Yeah, there's more to it than that. We'll need to look into why it came out this way, but it looks like 57.50, I guess. Oh, it is 17 points. Holy cow, that is a tight. It's funny, depending on the the scale on my charts, it seemed like more range than 17 points, but 17 points a range. That's correct. My bad. So a relatively tight overnight session, a completely balanced profile, and overnight inventories 88.5% short. So that's where that stands. What's on deck? 9:45 market services and composite PMI final for November, and 10 o'clock Eastern ISM non-manufacturing combined releases. And again, there's going to be news based events related to the stimulus, related to Brexit, and the U.S. federal budget as well. So look out for those. In terms of the review, here's what was expected yesterday. The primary expectation yesterday, and I went over the context yesterday's TB was probably a little bit long, but there was a lot of structure to work with here and a lot in play. And the expectation yesterday is a drop, a small push up, a drop, and I expected the market to repair to the downside. We had stopped the one-time framing higher, and we're pushing into the gap. The expectation is it would at least go down to the other side of the gap, and that's what scenario one was all about, with the potential pushing down even lower to 36.20, bringing us into the prior balance of balance in the prior box. Here, I'll share this with you. This is proprietary information to Convergent members, but I want to share this with you. I posted this last night. Whoa, what is going on here? I can't get this. Let's shrink this. So this is a chart I posted last night with the key levels. I don't usually share this, but here it is. This is my stock zone chart. And the reason I'm putting it on here is to show that we're trading in two different boxes here. We're trading in two different ranges. Just be aware of that. Yesterday, as I said, the way it put in the high and then it opened below yesterday, the expectation is it would drop through the range. What it ended up doing is it ended up holding, probably yellow is not the greatest color for this. Let's see. It ended up holding last week's high in here at 42.75. Essentially, yesterday's low was in that 42 area. It ended up holding this high, and the range that we are looking to get down into if we sell is the 36.42 to 35.92, about 50 points, about a week's worth of range normally. We've been covering that in a day often. And in that case, it would bring us back into the 36.20 area of balance, 36.16 and so on, and the high volume node at 36.08 right here. So yesterday, the expectation was it would drop in, consolidate here, and then start pushing even lower towards that 08. Of course, that didn't happen, so let's get that out of the way. The secondary scenario, which was off, was to push lower, consolidate down here. I had it going too low, down to 35 or so. It turned at 42. And then to push toward into the prior day's range, which is up here, push into the prior day's range and balance out. Somewhat of what happened, I had it going up to 36.60. We went to about 36.65. This is yesterday's actual. Here's what ended up happening. Consolidate sideways, an open auction out of range, and then the first impulse is to the first big impulse is to the upside. So 13.25 points. Again, this is what was expected down here. I expected it to push a little lower, expected it to have a little more fuel. It did not. Pull back to the prior day's low above mid and VWAP. Nice little setup if you can catch it. And then we extend the initial balance up, and then we start to continue to push up, holding VWAP all the way through, finishing at the high. Yesterday was a normal variation day, back into balance, and so it put in a lower low, lower high, but look at where balance is. It is the auction ended up really mostly taking place inside of the prior day's value, so these 2 days are balanced on top of each other. Making the current condition neutral. Yes, we broke the low of the prior day, ending the one-time framing up, which is in line with the weekly one-time framing up. But overall, we're in a balanced condition. So a lot of people are going to read this as, oh, it's a lower high, lower low. This is bearish and so on, but it's not, because we managed to bring our value area and our point of control into the prior day's value range, and that's balance. This basically acts as one day. These 2 days now act like they're one day in kind of a continuous auction, and so now we have a little bit of fuel to continue to push directionally. So if I throw a profile on both of these, we'll be able to see what the combination looks like, and as long as it stays above that 3661, we are likely to test highs and continue directionally higher. Look at the delta yesterday, mostly on the buy side, although the delta in the morning, I got to tell you, was very grindy. It was very kind of was just grinding up, but we did get positive delta yesterday with price. I expect this to continue higher. Yes, we're having a neutral overnight, but in my opinion, when you combine the 2 days, we essentially tested to the upside, tested to the downside, and ended up back above the high volume node. And so this is the area that is likely to be defended right here, and was defended yesterday by the sellers. You could see how it stalled, then it pulled back, then the Pelosi news came out, and then it ended up pushing and remaining above. And note that the top of this zipper, if I can draw it right, see how that holds right there? Once we broke through the top of the zipper here and here, now it became resistance, became support, and now we held, and then we held this from the prior day. So you see the action from Tuesday is really creating a single day between Tuesday and Wednesday, and we are holding right in here. Currently, we're trading at 36.6850 right in here. So we're in this upper distribution. So what does this look like? This looks like this. 3 boxes. So let's draw them. We have a box here. We have a box here. Box up here. So that's the bottom, and this is the top of the box. So what we've done is and then we have a box down here. So that's what we've done. We've moved from here to here to here, found buyers, moved back up. So you can make this into its own box if we want. Moved back up to this box, moved back up to this box. So you could see that it's low, higher low, one time framing up, one time framing up, not on the daytime frame, but on a short range, bringing us back in line with Tuesday. This is how we want to look at the auction, right? It's moving from area to area. Hey, this price is too cheap. Okay, let's buy it up. Okay, we've bought all the inventory that's there. Let's move up and see if there are sellers that we can find up here. Okay, we found sellers here, so let's distribute inventory up here, and so on and so forth. It's not a bunch of numbers, and it's not a bunch of ticks. There's more to the story than what your chart shows. There's an actual auction that is going on. Okay, so it's important to understand these areas, and the profile kind of outlines how much has happened within these areas. Okay, so that's what's happened yesterday. Scenario 2, but didn't really push as far as anticipated, and that's okay. There were some pretty decent setups yesterday, in my opinion. Hopefully, you took advantage. What do we have now? We have a market that has opened, dipped into the low volume node of the prior day, pushed the high, and then has come back to the point of control and consolidated around the point of control, and now it's above. The overnight session is sloshing around the mid VWAP and the overnight point of control. The overnight point of control, which is multi-pronged. There's a big prong here, and there's a big prong here. In fact, I can show you that just by going like this. You could see that there's volume here and volume here. So what we have is a market that is completely imbalanced this morning and is prepared to go with whichever side ends up pushing more into the session. Let's take a look at what's expected for today. The expectation, let's turn off these, turn on these. Okay, here we go. Share the screen. What are we expecting? This morning, remember your boxes. This morning, the expectation, given the overnight inventory, the expectation is an open auction, a push to attempt to take out this this high here. We've got multiple tops right here at the 70, expecting that to be taken out, expecting it to come back in, attempt lower, and then start to squeeze above yesterday's high to continue yesterday's auction, and in this case, the all-time high at 77.50 is likely to be vulnerable. I don't have very much up here. I believe I have a minor measured move at 85, and then the major measured move, which has got multiple confluences in it, is up at 92. So today could ride. The problem is the news. The problem is that we don't know. You know, new all-time highs. It's really hard for us to determine to determine what's coming down the pipeline. The secondary is an open auction that tests that 70, pokes up there, finds sellers, impulse down. Let me mark that. Impulse down, back below the overnight point of control, and then it starts pushing towards the MC point of control in that 61 area, and we're in the lower box area, all the way down into 57 before we pop up. The overnight range is predicting, in my opinion, we're opening in range, probably in value, in yesterday's value. The overnight range is predicting that this is likely not to be a very wide-ranging day. There's not the volume nor the range overnight to show that there's heavy participation and reallocation of risk, money moving from place to place. So I would be conservative, somewhat conservative with my targets, and equally with my risk. And if it starts to push through the overnight high, then the clear target 77.50, and beyond there again, it's no man's land. So not sure what you use to track it, but just at that point, you let your runner run if you can, and find a reasonable way to manage stops, and then just let it go. That's it. Good luck, and I'll catch you tomorrow. By the way, if you're a Convergent member, don't forget we have group mentoring today, group mentoring at 1 p.m. You should have received the invite for that yesterday by email, and you'll also get the note in the notice board and in the Head Trader channel. Good luck.